Hey, Steve Saretsky here. As always, in the description below, there's going to be a couple blog posts to go with this. Obviously here on Labor Day, I wanted to get this video out to you. I missed that one on Friday a couple days ago, so I apologize for that. But basically, just wanted to quickly recap. Basically, I want to update you on the Vancouver Real Estate market update, all the stats for the month of August, and then as well sort of touch on a few things that were happening last week in the market, which was normally again our Friday recap video that I missed. So yeah, I mean, basically gonna jump into it. Again, in the description below, there's gonna be links to have the Vancouver Real Estate Detached market report up on my site, as well as the Vancouver Condo report. It should be out today. So everything that I talk about will have sort of the charts and graphs and data that go with that. But basically wanted to start on the Vancouver detached market. So basically, it's been like a growing trend. This is, something I've been talking about over the last couple months. Is basically when you had your foreign buyers tax, you had like an immediate drop off. Like things basically halted in August when it was implemented in August 2016. The market basically plunged. You had months where it was basically the fewest number of sales over the last decade. We saw prices instantly come off because people, had the expectation that prices were going to come down. So they instantly wanted price reductions. And so basically what happened is, this is different than Toronto, is sellers essentially after a couple of months out, they realized there was no activity, buyers were wanting all these steep discounts, sellers basically took their homes off the market, people decided not to list, and basically purged new listings. So we saw, I think it was in January of 2017, we saw new listings drop by 50% year over year. So basically everyone's like, I'm not going to sell. And so what happened was this basically sort of helped reignite the market. People started to basically digest the tax, and you had, from a sales standpoint, prices, etc. You had a huge drop off after August and through the winter, and then back up price-wise as well. You had back up, and then now we are here in the late summer, beginning to early fall, where that price movement and sales is again starting to peter out as we get into a more basically. If you look at it right now, the sales to active ratio for August, and this is for July as well, is in Vancouver, the detached sales to active ratio was 11%. So that's indicative of a buyer's market. Now you can, people go, well, it's not a buyer's market because prices aren't down 20-30% and I still can't afford a house. Well, I'm just telling you the metric, technically speaking, from the real estate board's perspective, how do they quantify this? This is the detached market in Vancouver is in what's considered to be a buyer's market. Now you can argue there's still occasionally, if it's a good property, fair, well priced in a desirable location, it might still get multiple offers. But in the grand scheme of things, it is what considered a buyer's market. The sales to active ratio is 11%. If you continue to have a low sales to active ratio, I really do think it's probably one of the most important metrics to look at. It's going to push prices down eventually at some point. So if we look at inventory levels from a year-over-year perspective, Vancouver detached inventory is up 10% year-over-year. New listings were down slightly, about 5%, but they're sort of hovering around like a 10-year average. So the market is basically, it's kind of just, the detached market is kind of just there. There's not really much going on. Sellers are still listing. Things are sitting a little bit longer. They're still selling, but sales did. So this is going to be one of the most probably important stats to look at, because what's going to happen is you're going to see a bunch of reports come out probably in the next couple of days where these industry groups are basically going to tell you that, oh, sales rebounded since the last August because after the foreign buyers tax, sales are up. Now, it's important to basically understand that metric, because what happened was, again, that the foreign buyers tax without any notice was implemented in August the 1st. I think they announced it on July 28th. They basically give the market no chance to digest it. So instantly there was a massive drop off in sales. I think the average sales price of a detached home, the average sales price dropped 15% in 1 month. Now it was necessarily a skew, right, of averages, etc. But what's going to happen is these reports are going to come out in the next couple of days, and they're going to tell you, well, sales are up, and the average sales price on a year-over-year basis is also up. But that's not true. So if you look at it, yes, it is true, but okay, you're comparing to a month when, in the first time in history, Vancouver, as far as I'm aware of, Vancouver brought in 15% foreign buyers tax. So you have to look at it from a year-over-year and a whole year perspective. What are prices doing? So yes, the average price for a Vancouver detached home increased something like 7% compared to that specific month in August of 2016. But yeah, again, so basically I've included in my charts there a 3-month rolling average, which will basically show you that prices went like this, they peaked, they dropped, had a nice little dip, and then in the spring they picked back up, and now they're back down, curling downwards with the sales to active ratio that has also been pointing down over the last several months in the buyer's market. So I mean, going into the fall winter months, I'd expect the sales to active ratio, which seasonally is slow, will probably continue to put downward pressure on the prices. Again, that sort of depends on that price point. Like if you're looking for a detached home on the east side at 1.5, there's a good chance that, you know, like you could be in multiple offers, it's still selling quick. But if you're looking at, you know, $3 million house on the west side, that market is hurting. So, and just to put this into context, when I say Vancouver, I am, for simplicity's sake, taking the east side and the west side stats and putting them into one. But an important metric, I don't always understand what the market is doing. So if you look at the west side, Vancouver West, not West Vancouver, Vancouver West, there were fewer sales this August 2017, than there were in August of 2016 when the foreign buyers tax came out. So I think, like, other than 2008, of course, the financial crisis, August 2016 became the fewest sales of Vancouver West detached homes. Again, because of the foreign buyers tax shocked the market. But here we are 1 year later, and sales are actually even lower than they were in 2016 when the foreign buyers tax came out for Vancouver West Side. Of course, that's where you have a heavy influence of foreign capital. I mean, the reality of it is the majority of locals can't afford $3-4 million homes. That is a market that is highly predicated on that foreign capital coming in. So I don't know, you can maybe argue it's the foreign buyers tax, maybe the market tiring itself out. I think a lot of it has to do with Chinese capital outflows. If you look at luxury markets across the globe, they're all quite slow. Because, you know, the Chinese government has basically put a clamp down on capital outflows. Now, it's not to say that foreign money is non-existent in the market, but it's certainly died off. It's certainly slowed down. And that basically brings you into the condo market, where all the activity is happening right now. And it is primarily local driven right now. I'm not going to get into pre-sales. That's sort of a different story, but if you look at the detached market, again, I was telling you the sales to active ratio is 11%. 11% in August. For the condo market's at 65%. So, you know, you can see the two markets. You have a sales to active ratio of 11%, and you have 65% for the condo market. The average price per square foot hit $1,012. Just over $1,000 for per square foot for a Vancouver condo, and again, that sort of varies by area. You get into Yaletown, it's about $1,250 a foot. That's one of the highest, I think, other than Cole Harbour. So, you know, that's where we are. The average price per square foot, I believe, is now up 19% year over year. So we're still having this astronomical price growth. But the big thing here is really it's condo inventory. So, you know, you can obviously, there's different factors that are causing inventory to come down, etc. But from a specifically like micro level, it is ultimately about, you know, supply and demand from a micro level. So, and you have inventory down 35%. It has never in history been this low, other than December of 2016. We just passed that. So condo inventory in Vancouver is currently at its all-time lows. You know, new listings, I believe, are down as well. So they just can't replenish from, you have basically all this, you have a lot of speculation in the market. People are buying 2 and 3 condos because you've built up equity. Even if you bought a year ago, you're already up, say, 100,000. You can basically borrow against that, funnel that into a down payment. And so that's what you have a lot of people doing it. Personally, I have clients doing that. And again, like, it's sort of like everybody, makes their own decisions in terms of like investing. I don't really tell people what they should do with their money. I think there's no one, and I see almost like advice out there, like there's this sort of cookie cutter advice that everybody's supposed to follow. I think everyone's situation is so extremely unique that I can't sit here and spew advice for you when it could be different for somebody else. Just sort of continues to go on that path, right? I have a guy on Twitter that he basically complains every day. I'll tweet something about the market or whatever, and he basically fires back, oh, well, prices are still haven't come down. I'll never be able to afford. I should have bought 15 years ago, but I listened to the pundits. Everybody, you got to make your own decision. Like, I always look back at it as like everybody still needs a roof over your head. If you can afford it and the numbers make sense and like you want to own, then like go. Like, nobody's discouraging you from doing that. So I've never had a client like that I'm gonna discourage from buying. Like if you want to buy, if you're watching my stats and videos, like obviously my belief is that the market's going up by 20% year over year. Like, there's no question it's a frothy market. Could it go up higher? Like, absolutely. Could it come down? 100%. Like of course it could. But again, like, if the numbers make sense for you, like, and you want to buy, like, I'm not, I have clients this year already that have bought multiple investments. Is that the right or wrong decision? I don't know. Like, I don't have that crystal ball. So I think everybody sort of take these market analysis, take the stats I give you. Like, my whole goal with this is basically to provide you with the transparency on the market and for you to make that decision. Again, there's no cookie cutter advice, like, anyways, I'm not going to get into that, but basically that's sort of the market update for the week. Check in the links below. A couple things that happened last week to take note of that I found interesting. Basically, the Canadian GDP numbers, I think, were one of their strongest in the last 5 or 6 years. They came out, the growth was at something like 4.5%. So that's a very strong indication that the Bank of Canada could hike interest rates again by another quarter point, either next week or it will be in October. It'll be either one of those two. So expect sort of further increases. I mean, you're seeing the 5-year mortgage rates go up. BMO just hiked again last week. So their 5-year rate right now is at 3.19 for a 5-year fixed. So all these rates are definitely going up. I don't know how far Bank of Canada's going to go, but I'm just telling you that's what the data is today. Very strong from the Bank of Canada's perspective. Economic data. Now, again, that strength, you have to look at that strength. That's a whole other story to get into. All that strength is essentially, majority of it is coming from real estate. Consumer spending was up 4.6%. Consumer household, the debt has been accelerating at its quickest pace since, I think it was like October 2011. So that's all created by this wealth effect where, home prices go up, people feel confident. We saw loans against Canadian real estate was also up 11% year over year. So essentially, again, what that tells you is basically that people have so much equity in their homes, primarily from the last couple of years, where you've had prices, increasing by 20, 30, 40% year over year. And they're basically borrowing against that equity. And whether they're buying, a new boat, a home renovation, or a second or third condo investment, that's basically what's happening. This is helping funnel consumer spending. It's what's keeping these GDP numbers strong. So yeah, I mean, there's obviously, you always got to sort of peel back the numbers and try to figure out what they mean. But that's what I got in the market as of right now. A lot of stuff going on in the suburbs. I think I'll do another video on that separately. But some of the price growth in the suburbs is just like, it's astronomical, particularly obviously in the condo market, where I think like Langley condos are up something about 38% now year over year. So like, again, it's all in context, right? Like everything I tell you is, you can take it with a grain of salt. So when I look at it and say, okay, Langley condos are up 38% year over year. Clearly that's very unsustainable growth. Now some people might look at it and say, oh, well, that's a good reason to invest. It's going to keep going up higher. Or some people might say, oh, it's sort of, it goes up, that's gonna be crash territory. Like I'm not here to make any predictions, but personally, when assets increase 38% year over year, in my opinion, you're gonna have some pullback sometime. When, I don't know. So I'm always encouraging, this is never like investment advice, it's strictly educational, and you basically make up your decision. There's no cookie cutter advice. Everybody is responsible for making their own decisions, and if you're not already, hit subscribe. Thumbs up is always obviously appreciated, and I will probably do the next one. I think I'm going to return back to the Friday updates, basically recapping the market. So check back here on Friday and check the links below. All right, thanks.